Good evening, everybody. This is Bill Noble with Token Metrics TV, and this is Crypto Happy Hour. Joining me is Mark Cohen from Great Cliff Financial. Mark, welcome to the show.
Hey, Bill. How are you?
I'm good, sir.
Thanks
All right,
for having
Mark, no problem. Let's talk macro and then crypto. So I know you're a macro strategist. I know you're in the asset management business. Do you want to talk about what has worked out for you on the macro front so far this year?
Sure. You know, we got into Bitcoin on a retail level for clients in 2016, just the tail end of Obama. And, we always looked at it as though Bitcoin is king. And the reason why it's king is it's a finite supply. And, as people want to partake in it, the numbers get better and better and better. So we saw the money spent out of the Obama administration. We saw the downside we saw the upside from 4,000 and 20,000, then all the way down to 4K and sat there for a while and watched it volatilate through the pandemic. But we've been in it for a long time. And we're probably one of the first advisory firms to allocate retail capital to it so early on. We did it through the Grayscale Fund. And we took a lot of heat back in the day for doing that. Good and bad. So, from a macro level, where we're at today is, the credit worthiness of the, Treasury, the T-bill. We went through this in 2008 when S&P downgraded mortgage-backed securities. The fact that no one's even talking about the impending commercial real estate crisis. The fact that we're spending money hand over fist. I think we spent maybe $17 trillion over the last year or so, somewhere in that ballpark. We're becoming what we've never been. And, a community-backed dollar where there's transparency with regard to how it trades and who holds how much. And, with now on-chain metrics in 2021, it's something that we deem to be necessary as part of one's portfolio. We probably started with like 5%.
Okay.
And all of a sudden it amounted to like 20 very quickly and kind of held the position through. And now between the ancillaries, because you can't just invest in Bitcoin, of course, you're invested in Coinbase and Square and Tesla and all the sidearms that have some sort of interconnection to it, right? It's made it a huge part of our investing philosophy. And really where we've started to go is to categorize what else is out there. So, you talk to a Bitcoiner like myself who's been in it for quite some time, there's Bitcoins and shitcoins, but there are really some good projects out there, right? So what we've started to do is break it down by, what is everything? How do things really compete with each other? Who leads within the asset class? What is the asset class? And sort of breaking it down on a macro level as to what you have out there available to you and what you can potentially invest in.
So does that mean you're looking at things like, maybe like ETH or Polkadot or layer ones, or are you mainly, you're looking at other macro asset classes? I mean, are we talking possibly even adding physical crypto to your retail portfolio? So it's only through equity instruments.
So we've done that. We've added physical a while back, but, it's really breaking it down by asset class. Do you want to be in DeFi? Do you want to be in payments? Do you want to be a layer one or layer two? What's your thought on stablecoin and leverage? So, certain people believe in certain aspects of crypto. And, you get into DeFi, you're looking at Uniswap, you're looking at, you start looking at, smart contracts, you're looking at Cardano and Solana and Ethereum. And it's really become where the puck's headed, because you saw it with GameStop and AMC. It's not that the companies were necessarily worth the valuations that they were priced at. But, someone asked me the other day on a client meeting, why Bitcoin? I said, because everyone wants it. He said, well, what's that mean? I said, well, that's a market for you. When, the supply underweighs the demand, you have a supply crunch, and that's where we're going. You look at safe haven assets, the 30-year treasury. You would have been a loser if you allocated the basic model 70-30, 30-year treasury, maybe 20-year fixed income, 5% gold, 5% whatever. You would have lost that 30% to inflation and just NAV over the last year or so. So where do you find?
Can you believe what happened to these gold guys?
I do believe it, because other than the fact that your great grandfather told you gold was worth something, what's it really worth? You listen to a guy like Michael Saylor who really breaks it down. He'll tell you to put together an ounce of gold. It's like $180, $190, marked up 10x. So perception in really the macro view of things outweighs reality. Perception is crypto's a scam. I'm going to get ripped off. I'm not getting a project that I know about. Someone owns half the wallet, whatever the case may be, right? But, in the metals market, the commodities market, the Saudis have owned all the oil for hundreds of years. The gold market, who the fuck knows? I don't know if you're not allowed to say that on your radio show, Bill. But, when you really break it down, are you really an expert in what you're investing in? So the way I look at it is, from a more youthful standpoint, it's not me driving the Bitcoin price up. I'm already 40 some years old. I'm in. I was in at 4K. I'm in. Do I add to it? Yes. Do I add to Ethereum? Yes. Do I buy dips? Totally. Do I get new people in? Always. But it's my son. What's he investing in? Are you putting his money in the bank, or is he putting it in Coinbase? And I think you see it loud and clear. It's a generational shift within the monetary system.
Right. Bitcoin is hard money, and we've actually got work that shows Ethereum is, believe it or not, a better hedge against inflation than Bitcoin. So there's actually a lot of work out there that says either dollar lower or inflation up could not only be good for Bitcoin. So that's kind of obvious. That's the hard money play. But it could also be good for Ethereum. Now, when your retail client base got into market, was that through RIAs, or are all the retail clients just, are they all directly connected to your firm? In other words, how did the retail clients get the information to buy Bitcoin? How did you communicate with them?
So we have a firm. We have an RIA.
Okay.
We manage money for sophisticated money managers. So my rule, I got into the business 4 or 5, and languished there for 3 or 4 years. And, by the time 2008 hit, so did Dodd-Frank. So, my prerequisite was, if you went to, a top 10, what do you call this, business school, Harvard, Stanford, Penn Wharton, whatever the hell it was, we would take on your first $25,000 account. And you had to work at a bank or a hedge fund. And the thought there was, those guys will become managing directors one day, global heads, whatever the case may be. And Dodd-Frank restricted them from trading. So they had to go to their compliance department to get a trade cleared. By the time the trade was over, they already missed a trade. So it gave us full discretion with these sophisticated guys that more or less let us do whatever we wanted. So one day we're turning on CNBC in the office. We see Tom Lee on TV. And all of a sudden they're talking about Bitcoin. We say, what the hell is this? Let's give it a whirl. So we put $1 million in Bitcoin. And all of a sudden $1 million becomes $3 million within 2 weeks. So shit, might as well put another couple $1 million in Bitcoin. Now we're at like $8,500. And we let it ride. Every time we went up, 20, 30%, we peeled away from the onion because we had no idea what the hell it was. But, as we learned more and more, it became nothing more than a math riddle. And, it's really nothing more than, again, going back to that analogy of AMC and GameStop, it's community based, and it's what someone wants. And quite frankly, whether there's intrinsic value or not, if someone's buying it, it's worth what you pay for it. That's the oldest adage you'll ever learn.
Right. The reflexivity element in Bitcoin, where, it's going up.
Really old.
Say again?
I said really many of them. To say all of them would be probably too broad, but many of them. I agree with you on Ethereum. I agree with you on Cardano and Solana and certain projects that are out there. The key to all of it is patience. Everyone, coming from a management perspective, no one wants to sell at 60K. Everyone wants to sell 40K. I want to be a buyer at 40K. But it's the psychology of the unknown. And, I think there's so much unknown about what's going on out there, even though it's heavily promoted on CNBC and people tell you they know about blockchain and so on and so forth. 80% of the people that go on know nothing about blockchain. They weren't even in the game 2 years ago, much less 6 months ago. The firms they work for told you it was a scam 11 months ago. This is the biggest threat to the financial system that anyone's ever seen. And, it's really being taken by, Gen Z, Bill?
Yeah, Gen Z, that's my daughter's generation. In other words, millennials with money, anywhere between the ages of say 28 and 38.
And you think about it, right? It's the greatest wealth transfer ever. When I was a kid, I would invest in baseball cards maybe. And I made some money. It was fun, right?
Right.
But, today you have a 21-year-old that bought, $5,000 of Shiba Inu, and it's now worth a couple $1 million. So, it is by far the greatest and fastest wealth transfer in the history of the world.
Right. And I'm glad this one's actually benefiting the kids. You know what I'm saying? Particularly in in the NFT sector. And you're right. The street actually has to look out on this because it's really funny how fast Bitcoin went from sort of a 4-letter word to something that the government actually sanctioned to give people something to chew on in crypto. And really, we're glad to have you on the show because, frankly, I haven't heard of anybody that got retail into Bitcoin in mass from a managed asset point of view. Are you experiencing a lot of demand for additional research from your client base? Are they happy with Bitcoin?
I'll give you a better one. I'm not going to mention the bank,
okay,
but a certain bank that forbid their employees from buying Bitcoin. I sent their head of compliance's daughter to college on. And that was in 2016. What was your question?
No, the question was, are your existing clients clamoring for additional research, coin picks from you, or are they just looking for Bitcoin guidance, or are you guys just are you guys just going to hodl it and that's it?
Too new. If you don't go out there and force the education, you're going to have a difficult time raising money, and you're going to have a difficult time peaking interest. Only 4%, I believe, of the country use Bitcoin. On the surface, good number. In reality, shit number, right? So, you're dealing with a very finite audience because we had discretion. We could do whatever we wanted without talking to someone. And we took a bet and it won. Today, are we the smartest guys in the room with our clients? Yes. When we go to new people, is it still the scariest thing they've ever done? Yes.
Interesting.
And I'm talking about, mom and pop, retiree, not even retiree, 40, 45, 50 people saving,
All right. So
they want the excitement of it. They want to be in it. I don't think that, again, I'm sure you've been in the game for a little bit too. Takes a while.
Right. No, it's not like a learning curve. It's a learning journey.
They're screwing us again.
That's right. So tell everybody out there how they can reach one of your registered investment advisors. Tell everybody how they can get involved with you.
Sure. So we're Graycliff Wealth Management. Just email our admin at graycliffwm.com, or in addition, we're starting a multi-asset fund, Graycliff Digital Assets, which will be launching in the next probably a month or so. We're taking seed capital in now, but that will be available to high net worth, in addition to a potential ETF down the line. So email admin@graycliffwm.com or 212-408-5000, and you can reach our voicemail or assistants who are there pretty much 24 hours a day.
So you'll have an RIA and a digital assets hedge fund, or is that accurate? Or a digital assets asset manager, right?
It would be an evergreen hedge fund model in addition to a potential multi-asset ETF.
All right. There you have it. Mark, thanks for coming on the show. Friends, be sure and check this out. Again, a guy who got people in Bitcoin through the equity market in 2016. Somebody you want to keep an eye on. This is Bill Noble from Token Metrics TV. We'll see you next time.